It's a continuation in the mutual fund product. Now we are going to see the types in debt schemes. I think we are all aware that what is meant by debt. It's called debentures. When the mutual fund company or AMC is going to invest that pooled money in the debentures, mean that is called there the debt fund. The debt funds are many more, and some of them is going to discussed in this slide. One is overnight fund, liquid fund, money market fund, dynamic bond, corporate bond, and gilt fund. What is meant by overnight fund? This is also the all are open-ended fund. An open-ended debt scheme investing in overnight securities. The investment in overnight securities having a maturity of 1 day. So which mean to be nature, I am investing today, it will get matured by tomorrow. It is a ultra liquid fund which will be providing there that good return based on there the market volatility. And market volatility is nothing but to be nature, whatever the changes are happening in day by day, all these the returns are is also associated with the day by day changes. It will provide a good return, as well as by average it will give the a good return to the public or investor. And go to the next, the liquid fund. It is not that much in the overnight fund, it is a liquid fund. It can be liquidated within the short span of time. That start span of time is nothing but the 90 days. So when the investment is going to made for debentures for 90 days, then the fund is called the liquid fund. And move to the next classification is money market fund. It is also the open-ended debt scheme investing in money market instruments having the maturity up to 1 year. So money market instruments means any equity, any debt scheme, any bills. These are all come under the classification of money market fund. And we'll move on to the next one, dynamic bond. It's a open-ended dynamic debt scheme investing across duration. It may be there the day, it may be a 90 days, it may be a 1 year, it may be a 3 years, it may be a 7 years. So according to their that various requisite, the fund is going to be invested in all the category which is called there the dynamic bond. And move on to the corporate bond. This also the open-ended debt scheme. It investing in AA plus. This grade is given by the credit rating agencies based on the performance of the companies. And above rated corporate bonds, the minimum investment in corporate bond shall be 80% of total asset only in the other things, which mean these bonds are going to be issued by corporate companies to their the debt instrument scheme, apart from getting the loan from the other banking companies. And move to the last one, gilt bond. The most safest bond in there that any type in the debt instrument is the gilt fund. This is a open-ended debt scheme investing in government securities across maturity. The minimum investment in government sector is defined to be 80% of total assets. So if it is 100 rupees is pooled in this particular scheme, 80% should be invested in government security and 20% in the other debt securities. So in this particular classification of debt, we are aware that what is mean by overnight and liquid, money market, dynamic, corporate, and gilt fund. Nandri.